Hi, welcome everybody. Welcome to the first live stream on the Trading Setup channel. Um, we're going to try and um, teach you guys the right way to trade here. Um, Hopefully, this will be your source of what you call it. Sorry, I just want to. We're going to teach you strategies, we're going to teach you indicators, and we're going to show you guys the right way to trade. So, today's video is super important. We're not going to be doing too much trading in this video, but if you're one of the people that's thinking right now this video might be a waste, this is especially for you guys. We as traders develop habits when we learn to trade. So depending on your source of material when you start to get into trading, you will develop a bunch of habits, and some of these habits will be bad and some of these habits will be good. And we're going to look today because it's something that a lot of people don't think about when they're trading. I know so many people that just go and sit in front of the charts and they start tapping away and they don't understand why they are not making money. But they've got a bunch of bad habits, they're doing a bunch of stuff wrong. I'm going to show you guys today, or at least going to talk to you guys today about some of the bad habits you might have picked up and what they are. And we're going to look at some of the better habits that you guys can adapt and make part of your daily trading to become profitable and to become a good trader. Okay, so first off, I'm going to look at the bad habits. So we're going to, I've got 10 points here that I'm going to talk about quickly. And these are things that we need to avoid at all costs. Okay, so if you're doing one of these, you need to go and sit down and work out a plan on how you're going to change this in your personal life. Unfortunately, there's no fix all solution. People are different, and I can show you what the issue is, but you'll need to figure out how to incorporate that into your daily trading and into your daily life. Okay, so first thing I'm going to look at is one of the most common problems is over trading. What does this mean? What is over trading? So when you go and sit down to start trading for your day, you are supposed to have a strategy and a plan. And over trading will be when happens when people start to get either impatient or they have maybe lost one or two trades, and then they're trying to make it up with volume. Okay, so they're trying to make up to do more trades, thinking that they will either recover or, like I said, due to impatience, they start chasing trades because a lot of people just can't sit still and can't accept that their strategies is not giving them any trades at the moment. So that's the one thing that I see. I want to say most often I see people just batching in entries and exits, entries and exits, entries and exits, and it's not sustainable. It's really not a good way of trading. I have not seen a strategy in all my years of trading that allows anybody to do to take positions every 1 or 2 minutes. It doesn't exist as far as I'm concerned. So yeah, overtrading leads to losses, and it's something we really do need to avoid. Another big problem I often see is risk management, or actually the lack of risk management. So a lot of people ignore risk. Risk is defined as the capital we are willing to put into a trade for a certain reward. Okay, so you will oftentimes hear people talk about the risk reward ratios, stuff like that, although risk reward ratios apply mostly to Forex, because when we're trading options, we get a fixed reward. But again, where risk comes in with trading also is, like I said, it's the amount of capital we're risking. Now, if I've got $100 in my account and I want to start trading, it's not going to be smart of me to risk $20 or $10 even, which is 10% of my capital. It's not smart to risk large portions of your capital for gains. So what we need to do when we're doing risk management, or if we want to do risk management properly, we need to determine a much smaller, we need to manage our risk. Okay, so we're not gonna, I'm not gonna put this in a very simple way, really. Suppose I've got $100 in my account, and I'm deciding I'm gonna do $20 trades. That means I can only get five wrong, and I will have no more capital left. So that's, if you don't have capital, you can't continue. So we need to understand that trading is a marathon. It's not a sprint. We're not going to get rich quick. Nobody does. You get the occasional lucky person, but in general, it's not a get rich quick activity. It does take a while. It does require patience. So it's going to take time, and you need to build your capital. But while you're building capital, you need to minimize risk. Okay, so the less we risk, the more errors we can take. Errors, but the more buffer we've got to be wrong, if that makes sense. Okay, so we can be wrong more often if our risk is less, and it will also take the stress off you, right? So I've seen so many people in the chat saying, one of the things I read often is people saying, "Oh, when I take the important trades, I always lose," and important means big, right? So that's important for people. Or you'll see people say, "When I trade big, I lose." It's it's got a lot to do with psychology, because you are putting yourself in a position of stress if you trade too big. If your capital allows a certain amount of money for you to risk with each trade, the bigger that amount is, the more stress you generate within yourself, because you're placing pressure on yourself to win this trade, because this is a big one. It matters. I personally trade 2 to 3% of my account. I do not like going over that, because if when I start going bigger, I start getting stressed and I start to worry, and we don't need it while we're training. Training is stressful enough. We don't need to do stuff that we basically just pile onto ourselves and increase our risk. Okay, so we've got overtrading and risk management, or rather ignoring risk management. The third point will be revenge trading. What we need to understand when we're trading, it doesn't matter what your strategy is, you will have losses. I have losses during every trading day. I have not seen anybody trade with 100% win rate consistently. You do get runs where you get lucky sometimes. It's part of the game. But there will be losses. The trick is to accept those losses and just wait for your strategy to give you another entry, because then you wait for the next entry, but you don't immediately start taking trades outside of your strategy to try to get your money back, right? Because that's what revenge trading is. If my strategy gives me a call entry, I'll take my call entry. If I lose that trade, I shrug it off and I wait for my next entry. But a lot of people will take a call entry, market goes against them, and they'll immediately take another trade. Or worse yet, immediately take a trade twice or three times the size of the one they just lost. So you're doubling down on losing trades, and it's really not a good strategy because you're going to end up losing a lot more money. We do not want to take revenge trades. Just accept them. They do happen. They happen for everybody. And as I've always said, if somebody is trying to convince you otherwise, they're probably trying to sell you something. It doesn't exist. We all lose trades. Okay, so don't revenge trade. Accept your losses and just carry on with your strategy and with your trading plan. Right. So next up, we have discipline. Discipline, or rather, a lack of discipline. Discipline kind of ties in a bit with the revenge trading we just mentioned, but also discipline. When people say when we say you need to have discipline, it means you have to have the discipline to stick to your trading plan. So if I start my trading plan, I've got my 3 main strategies that I use, and I do not deviate from that plan. If I'm having a bad day and either I'm not getting entries or the market isn't, my strategies aren't working well for that day, what I do not do is to start making other plans to try to get more entries or start changing stuff or just start looking for new strategies I could test, which is something you should never do, by the way. You don't use a strategy ever. Doesn't matter where you see it or read it. You don't use a new strategy without testing ever. But you have to have the discipline to stick to your trading plan. When you go and sit down today, you know this is what I'm going to do. So you need to stick to that. We do not deviate from our trading plan. The trading plan you have should be, if you're new to trading or if you want to start trading, this is the first thing you need to look at. You need a trading plan. You need to develop one that suits your personality. This means that I have to go and, if I'm new to trading, I have to go look for strategies, right? Do some research, and then I'm going to look at a few strategies and see which ones I understand intuitively, and then read up more about them, make sure I understand them, and then, what's the word I'm looking for? Get familiar with them. And then I'm going to have entry conditions according to those strategies, and that's my trading plan. Okay, your trading plan consists out of risk management. We just covered that, and strategy. That's your plan. So you need to have the discipline to not deviate from that plan. Some days are going to be awesome. Some days are going to be bad. You're going to have good days and bad days. And it's not only the markets that influence that. There's a lot of things that influence whether you're having a good day and bad day. We will touch on that in just a bit. But we're going to do lack of discipline is a very important thing. It's a very common thing as well. Like I said, when people get 1 or 2 trades wrong, the plan goes out the door, and they just, I almost want to say, go kamikaze and start trading left and right. And that's going to lead to losses. It's not sustainable under any conditions. Okay, so work out a plan for yourself and stick to it. Test it and stick to it. Okay, so next up, we have something a lot of people do is neglecting emotional control. A lot of people, when they trade, and if they start doing the stuff we just discussed, if they start over trading, if they start ignoring risk management, if you start doing revenge trading, if you don't stick to your plan, if you start doing these things, you're going to end up with either most commonly will be fear of losing your capital, or fear of missing trades. FOMO is a big thing for people. Greed, not willing to accept a loss because people tend to trade too big. There's a lot of things that can lead to you just starting to be overcome with emotions while you're trading. So emotional control is super important. There's a few ways. There's two main ways that I combat this, or then the two main ways I know of that you can do to the two main ways you can avoid emotional turmoil within yourself while you're trading. Number one is have a proper trading plan. We just discussed it. You need a proper plan. That way, when I'm trading, I have my plan and I stick to my trading plan. I wait for my entries from my strategies, and when I do get one, I take it. If I get a loss, I don't get excited. I don't feel disappointed. I don't feel sad because I know I'm going to experience losses. I know my strategy is profitable in the long run. All I have to do is just sit back and wait for my next entry. Okay, so there's no emotion, and also I don't take huge trades. So if you avoid the previous problems, or the previous habits we discussed just now, you will avoid getting emotional. The second thing, and we tend to, traders tend to very much neglect our physical health. And it's super important. Okay, so you need to get good sleep. Don't try to trade if you had a horrible nights, you didn't get any sleep, you were tossing and turning, you're tired, you're agitated. Don't trade. If you guys need help with sleep, there's a dude on YouTube. His name is Dr. Andrew Huberman. He's a neurologist, and he has some great content on how to improve your sleep cycles and stuff like that, and how to get it to stabilize. So if that's something you're having trouble with, especially, I know a lot of people struggle with sleeping well. Check him out. It's really worth it, and it's absolutely free. So sleep is important. Another thing that I started doing a couple of years ago that really helped me was I started getting into mindfulness, where I will every morning I just take a few minutes, usually like 20 minutes or half an hour, where I go and sit. I'm quiet, close my eyes, and I'm just being aware of everything around me. Right. So mindfulness is a great thing to get into. It will definitely, if you do it often, you will start getting more relaxed. You won't stress that quickly and whatnot. So, but like I said in the beginning, people are different. Something will work for you, or what works for me won't necessarily work for you. But you do need to look after your physical self as well. Get some exercise on a regular basis. Even if you just go for a walk every morning or every afternoon. Mornings are better, but get some exercise and exercise, sleep, stuff like that. We do need it, and it will definitely affect your trading. Okay, so we covered that. Next up is something that I tend to speak a lot about, is inadequate research. Okay, so a lot of people are using indicators and they don't understand what it's showing them. They have no idea how it's calculated. And I really think it's important if you want to use a tool, because any indicator you put on your chart is just a tool. Okay, it's a tool to help you read the data from the chart, and that's it. So indicators are tools. And if you do not understand your tool and you don't know what it's showing you, you simply cannot use it effectively. Same goes for strategies. Um, there are so many videos on YouTube where people do a 1 minute clip and they're showing a strategy and they're showing 5 wins, and people just fall all over that nonsense. Um, they don't do the People don't do their research. They see something and think, "Oh, this is good," and they jump on their live accounts, and their accounts are wiped after a few minutes, and nothing's working because they didn't do the research on what they saw, and they didn't understand what they saw. Right? So um, there is no magical strategy out there. There is no silver bullet. It doesn't exist. You need to do the research on the stuff you want to use. Especially if you're new to trading, look at all the different indicators your platform offers you, and then read up on them. Read them so you understand what they are showing you. I often ask people, what the purpose of the stochastic is, because this is something that most people don't know. A lot of people will tell you that your stochastic oscillator, for example, if it's overbought, they will sell, and if it's oversold, they will buy. Whereas the stochastic oscillator was designed when it's going into overbought areas. It's designed, it's showing you that its price is likely to continue for a bit in that direction. So people are using it in the exact opposite way most of the time that it was designed for. Because they couldn't be bothered to actually do the research on the tools that they are trying to use. Right? So it's super, super important. If you want to use something, you need to understand how it works. You need to at least understand what it is showing you. Okay, very important, very, very, very important is research. Just research. Right. We have 2 more to go, and then we're going over to the positive stuff. Next up is chasing losses. This is where that little evil martingale dude comes in that people love so much. As I mentioned earlier, quite often when people do revenge trading, they not only start doubling down on losing trades, or they start chasing entries where entries don't exist, but they also start pumping up their trade sizes. And although martingale, I don't like martingale that much, but it does have its place. But doubling down on losing trades just to chase losses is a bad idea. It's really not a good strategy. You were wrong, accept it, move on, wait for the next entry. All right, it's really that simple. And then the last thing is people tend to get into a groove. So people will find something and it will work for them for a while. They'll find a strategy or 1 or 2 indicators, and they'll kind of like build their own strategy. But then they sit back and they think, okay, fine, I've got something that's working now, and this is what I'm going to do for the rest of time. And what happens is it goes well for a while, and then everything starts going wrong. So people tend to neglect continuous learning. Okay. So the market is dynamic and the market is always changing. I can tell you that trading today is a lot different from what it was 15 years ago. I was trading 15 years ago. I was doing online trading 15 years ago. And I can tell you that today is a different game from 15 years ago. And it's like any other industry where you have to keep up with new developments, new tech. You have to keep up with research, basically. Okay, so it is evolving. Oftentimes very slowly, so you don't immediately if you don't do anything, you don't immediately realize that everything's changing, but it is changing. I almost want to say every second year is already completely different from the previous 2 years. The market is forever changing, and the tech is forever changing. We need to keep up with it. So make a point once a week, maybe. Set aside 1 or 2 hours on a weekend or whatever. If you're bored, read up a little bit on, what stuff that's happening, new technologies. Read up on some fundamentals. We had the election now, and it really influenced. We saw a massive amount of volatility this week. Well, increased volatility due to the US elections. So we need to keep up with those things so we're not caught off guard, and that we can be aware when conditions of the market starts changing. Okay, so we need to keep up with that. Right, so guys, there was 9 bad things people tend to do. But now, let's have a look at what you should be doing. So if you're doing any of these if you have any of these bad habits, or you're doing some of these things that we just discussed, you'll need to go and sit down and work something out for yourself. Try to identify that. Be honest with yourself. Am I doing this or am I not doing this? Because it's your money that you are risking. Be honest with yourself and just ask yourself, what am I doing here? Am I doing one of these things, and what can I do to change it? Okay, because nobody else is going to do it for you. Promise you, nobody else cares. You need to do this for yourself, and you need to sit down and be honest with yourself and try to figure out what you're going to do to change this. Okay, right. So what's the good things? What's the stuff we need to do? First off, and for me, this is the absolute most important thing that any trader should do, but so few traders do. Okay, guys, by the way, I'm going to just quickly take a small break here from the habit thing. First of all, if you guys have any questions, please ask them. If you don't have questions, just want to say hi, do that. But if you do have any questions, ask them now. If there's something you don't understand, something I said or explained that might be still unclear to you, this is a brilliant opportunity. Ask those questions so we can get that out of the way. Also, those of you that are trading with PO Broker, I've got a little thing for you. This will be Habits 80. You guys can use that for a deposit bonus. Okay, let's look at the stuff we need to do. Like I said, most important thing, in my personal opinion, the absolute most important thing that you must have, and that most people don't, is a trading plan. A very clear, well-defined trading plan. This is your strategy that you're going to use, or a large chunk of that is the strategy that you're going to use for trading. And you need to have very clear, defined rules for taking trades. If you are unsure, if you take a trade and you cannot explain to somebody exactly why you took that trade, and as a reference or as an off point, I thought it's going to do this, or this is not an explanation. Okay, if you cannot explain why you took that trade, you shouldn't have taken that trade. It's as simple as that. Or your trading plan is lacking, seriously lacking. You need to know exactly why you take every single trade, and you have to have well and clear defined definitions of entries. We cannot go without this. It's absolutely crucial. If you don't have this, you're going to have a bad time. Okay, work out a trading plan. Look at some strategies. If you're struggling with it, see if this thing is profitable. You get a lot of data and see if it's profitable. If it is, and if it's something that you understand, use it. But you need to do the testing stuff first, unfortunately. If you don't test it, there's a lot of bad strats out there. There's a lot of, like I said earlier, there's a lot of videos out there showing supposedly good strategies and doing all-in trades and stuff like that. It's a horrible idea to do that. And these strats show you five or six trades maybe. It's not enough to understand, to know if something is working properly. You need to test your stuff, but you need to have a trading plan. That's the first thing we need to have when we start trading. The second thing we need is goals. And it's probably going to surprise a lot of you people watching. A lot of people set monetary goals for themselves when they trade. And I think it's a horrible idea. The reason being, if I set myself a goal of X amount of money, I have a certain amount of time that I can trade every day. So if I set myself as a goal of X amount of money, what tends to happen is when you reach the end of your session and you have not reached your goal yet, people start chasing that goal and then they start making mistakes. They start forcing trades. They start taking trades that's not quite as good looking as it should be, and they start losing again. And I think a lot of people watching will be able to profits gone, or you maybe even end up in a loss. And it's because we're chasing targets. Just a little bit more, just a little bit more. We're back to what we mentioned earlier. We get greedy. We're not willing to accept what the market is giving us, and we start chasing. So it's not a good idea. Instead, if you're setting goals for yourself, set some time out. My goals, for example, is currently the UK session kicks off 10 o'clock in the morning, my local time. Okay. So my first goal of the day is to trade from 10 to lunch. That's 1 o'clock. My goal is to sit there for 3 hours. 2 15-minute breaks in between I do take, but my goals is to get the work done. That's the kind of goals I set for myself. Trade the time you have to. Another goal is accuracy. I try to be as accurate as I possibly can. I wait for my entries. My strategies are well defined, so I don't need to. I know exactly what setups I'm taking. So all I'm doing is waiting for my strategies to give me entries, and I'm trying to. One of my goals every day is to maintain a certain amount of a certain percentage of accuracy. But I never ever have monetary goals ever, because that's something I start chasing. We do that as people. We start chasing those values. But if we get the trading right, we don't need to worry because the money will automatically follow. If we get the trading right, the money will follow automatically. So money is the last thing we worry about. Unless it's risk management, then we worry about it. Okay, but don't worry about how much money you're making. Worry about getting the trading right, because if that's right, money will follow. Okay, so we need to set realistic goals. Thirdly, we need to practice patience. It's something a lot of people struggle with. Myself is by nature quite impatient. But it's a skill, and skills can be learned. Okay, so we need to practice being patient. That means we're going to wait for our strategies to give us entries. Simply put, I don't know better than my strategy. So I'm not doing anything unless my strategy tells me to. Which again brings us back to how important strategies really are. Your trading plan that you need to have before you sit down is super, super important because it affects so many things. But it's patience is something we need to practice, and fortunately we can. Okay, it's something you can learn. And if you want to be a successful trader, you will definitely have to. I oftentimes recommend to people, some days your strategy is slow, and some days half an hour might go by without me getting any entry signals from any of my strategies. And that's my limit. I cannot sit for longer than half an hour not doing anything. So what I do is get up and leave, and I'll come back in half an hour or an hour later. I have to do this to avoid getting impatient in front of the charts. Some people can sit for longer. I can't. 30 minutes is my absolute limit. I cannot watch a chart for more than 30 minutes without getting entries, because then I really start getting agitated. So I go do something else. Instead of trading, though, I go do something else. But we need to learn how to deal with impatience, because it will burn you every single time. Okay. Then good risk management. Something we discussed now just a short while ago, where people have bad risk management. So we need to go and look at risk management. What is good risk management then? Well, if I have $100 in my account and I start doing $10 or $20 trades, I'm going to put so much pressure on myself to not lose trades that I'm going to be focused on not losing instead of focused on what my strategy is giving me. It's going to bring up emotions with you. You're going to start panicking. It's going to lead to over trading. It's going to lead to revenge trading. And before you know it, as I've seen so many times, people's accounts are wiped and they have to start over. What you need to do is back to trading plan. Once you have a trading plan and you have it tested, and you know what your average win rate is, let's say over 500 trades, you know that your average win rate is, let's say, 75%. What you do then is take an amount, and this is something you can work out, but take an amount that if you do that amount of trades and they go wrong, right? Meaning that, let's say you win, on average, that system for you wins 7 out of 10 trades. Then you take 7 trades, you work out your, let's say, I would not go more than 10% maybe. So you divide that win rate into 10%, and that's your trade size. So on 10 and 7, it'd be like roughly $1.20. And that's going to be your trade size, more or less. You can go up to 2% of your capital, but don't really go too high, because then you start putting stress on yourself. And 10%, 2% doesn't sound like a lot, but if you're trading on 2%, and like I'm trading on a 92% payout, 6 trades and I've already done 10% growth, which is a lot. Okay, so don't do massive trades. Keep it small, keep your risk small. It's going to take away stress. It's going to take away fear and greed. Just relax, do your trades. 6 trades in a 2-hour session is not that bad. You can wait for really good setups, and you can easily do 6 trades in an hour. In an hour or two. Okay, easily. Now, let's say 2 hours. You can very easily get 6 trades, right? While being patient, and that's just over 10% growth. And if you do this daily, I mean, it's insane. There's no reason to rush. Okay, so keep the risk management good, low, proper, whatever you want to call it. Just do normal risk management. Small, keep it conservative. Okay, guys, staying disciplined. We spoke about not having discipline, what happens. So, again, It's much easier to stay disciplined if we have a good and clear trading plan. Then we know what we need to do. We don't have to guess throughout our trading session what we're doing. Uh, we don't have to take random trades and stuff like that. We need to have exercise discipline, follow our strategy, and keep the emotions low. Right? That's what trading plans are for. It's it's gonna help you so much if you have a proper trading plan. I can't stress this enough. How much it's gonna help you if you have a clear and proper trading plan. It's gonna take away so many of the bad things happening. But it's something very few people have. It's important. Then another thing people seem to be super scared of doing: keep a trade journal. Keep a trade journal. That means keep track of all the trades you take, good or bad. I can show you trades that I took 5, 10 years ago. I keep those. I do. I personally, I keep track on a spreadsheet. It shows me my monthly win rates, daily win rates, weekly win rates, monthly win rates. It shows me growth for every day, for every week, for every month, because I need to know if what I'm doing is working. And I cannot do that while I'm trading. I don't, quite often when the day is over, and you ask me how many trades that you do, and I'm going to have to say I'm not sure, because I can't keep track of it in my head. I can go to my spreadsheet and we can go look, the information is there, but you need to keep track of your trades, and you need to review this data regularly, because you need to know if what you are doing is actually profitable, if it's making money for you. So write down every single trade you do, and then go and sit and look at it. How many did I win? How many did I lose? Hang on a second, I'm losing half my trades. So what I'm doing isn't working. And you're not gonna see that if you're just staring at the screen and clicking away. It's so important to keep track, and if you're not familiar with Excel and you're not good with formulas and stuff like that, there's so many websites where people will help you free of charge with Excel formulas. I've used, you can just Google, there's a lot. And I went there for help in the past. Sometimes I struggle with the formula. But if you're struggling, ask somebody that might be good in Excel. If not, go there. Just ask people if somebody was willing to help you. Set up a spreadsheet so you can see the statistics of your trading. See how many trades you're losing. See how many trades you're winning. It's super important. If you're using more than one strategy, with every trade, just why did you take that trade? Keep which strategy gave you that entry, and then look at the data once a week or once a month at least, and see what's if it's worth doing what you're doing. Okay. Then last one is maintain emotional control. So I jumped the gun with this one a little bit earlier, but I often get asked. People really often ask me how do we control our emotions? How do we stay calm? Three things, in my opinion. There's three major things that makes people lose control of their emotions. Number one, again, not having a proper trading plan. It's so crucially important. So have a proper trading plan. Have your clear and well-defined entry conditions for taking trades. Don't take trades if you can't explain exactly why you took that trade. So, trading plan. And secondly, is exercise and sleep. Make sure your body is healthy. I am super guilty of eating sugary things. But if I do eat sugar, couple of hours later, I actually can feel it impact me. So I avoid it because it affects how I feel. It makes me feel groggy and it makes me feel sleepy when I eat sugar. So be healthy. Make sure you get sleep. And then thirdly is take some time off for your mind. Take half an hour in the morning, just go and sit outside, close your eyes, and just be aware of what's going on around you. This will help calm your mind. A lot of people call it meditation, but whatever you want, it's just learn to be present. Again, it's skills. All of these things are skills we can learn. Okay, so it's not, if you can't do it now, you don't need to worry. You can actually learn this. It's going to take a little bit of effort, but you can learn it. You can learn anything, or almost anything. So do those three things. If you want to be successful and you want to and you want to change, be healthy, look after yourself. We are the tool as well. We don't, us as traders, we don't really, work with people or stuff like that. We don't use physical tools, but we are the tools that we use to make, to make money, to make a living. And we need to look after ourselves as well. And we tend to neglect ourselves. So yes. Okay, so guys, we didn't do a lot of trading today. In fact, we didn't really look at a chart today. And I promise you guys, this is going to be the first and last video that we do it this way. But it is absolutely crucial that people understand what we discussed here happens. All of the things here needs to happen before we start trading. So this channel is going to be, I'm going to teach you guys so many things. We're going to look at so many different things. We're going to be discussing indicators. We're going to be discussing strategies. We're going to be discussing a ton of stuff. The thing is, though, we're going to get people watching that's brand new to trading, and even people that's been trading for a short while that do not know this need to start trading. So again, like I said earlier, sit down, look at the stuff we discussed today, and just be honest with yourself. What am I doing here? What am I doing wrong here? What am I doing right here? Which areas do I need to focus on? What do I not have? Do I have a trading plan? Guys, it's so crucial. I cannot begin to, I really can't stress this enough. It's the most important part of trading. Do you have a trading plan? No. Then get one as soon as possible. Okay. But we did discuss a lot of information here today, and yeah. Next video will be on strategy a bit. If I'm not mistaken, no, kind of. We're going to look at some indicators next week, I think. But yes, guys, thank you for watching. Those of you that joined, although nobody even said hello. And again, if you guys are trading with PO Broker, there's a code for you, Habits80. So if you need to make use of that, and yeah, hope to see all of you next week. And thank you so much for watching. And as always, guys, trade smart and trade safe. Have a great weekend. Cheers.